It's a simple question, what is my firm worth? But it's a very, very complicated answer. And the reason it's so complicated is that in most other businesses and most other industries that we have, there's some sort of hard assets upon which the business is based. Maybe it's a real estate assets or equipment of some variety, but that's not the case in an engineering, architecture, environmental consulting firm. What we have in this industry are assets that are made up of the brains of the people that are working there every day, and those get up and leave every night. And the only way you can value a business like that with any degree of consistency or reliability is to forecast what the future cash flows, future earnings stream of that company will be. And that is how a service business makes money, applying the knowledge of its people to generate cash going forward. Our challenge, what makes evaluation so hard, is coming up with the best estimate of what those cash flows and what that earnings stream actually is. To get that answer, we need to use the income approach, and that is estimating the cash flow streams. That's figuring out what the business is going to generate this year, next year, and really over the next 5 years is what we like to do. Typically, businesses are going to last more than 5 years, so we need to do some sort of estimate for what happens beyond then. But the hard nitty-gritty analysis, which we work very closely with our clients to get, is what are the expenses that are going to be compared to the revenues over the next several years. And when that is done, we get the future earnings of the business, bring that back to the current point in time, and that is our value for the firm. Ownership transition, particularly from the internal perspective, is a much different question. Once firm leaders have a valuation in place, they often want to start thinking about transitioning the firm's shares internally. Everybody understands that there's a financial commitment there because it takes usually anywhere from 6 to 8 years to transition out senior leadership or the founding partner from his or her shares into the second tier. While that is going on, there needs to be a concurrent effort to train up the leaders, the new owners, the people coming into the business to make sure that all the clients are taken care of just as well as when the senior partners were there, and all the operations go just as well as they have, if not better, than when the senior partners began the firm years ago. It is a more strategic plan that is necessary in an ownership transition exercise than just a financial plan. And that's one of the things we try to help people figure out.